Hello everyone and welcome back to the sessions on economics for finance. Here we are into the chapter public finance, that is chapter 2, and within that we are into the third lecture. So this is the third lecture of chapter 2 public finance, and in this class we are going to get started with unit 3, that is government interventions to correct market failure. So please write this heading and then I take you ahead. So let me tell you what exactly this whole unit is about. This is all about government's intervention. So basically in the earlier unit you have looked into various reasons of market failure, what could be the causes of market failure, and in this unit you are going to look into what will be government's role to overcome or to correct those market failures. So let us just begin with this. So the first thing that we talk about over here will be government intervention to minimize market power. Now you know what is the meaning of market power. It is basically a monopoly power, and how would that be regulated by government? Let us look into this. Establishment of rules and regulations could be one primary move by government. Government can establish rules and regulations to prohibit actions which are likely to restrain competitions. These legislations differ from country to country. Such legislations generally aim at prohibiting contracts, combination and collusion among producers or traders which are in restraint of trade and other anti-competitive actions. You know one thing, that in India we have Monopolies and Restrictive Trade Practices Act, that is a very important law that prevails, that is MRTP, Monopoly and Restrictive Trade Practices Act, MRTP Act. So just write these couple of paragraphs and then I take you ahead. Alright friends, so once you have written this much, let us move ahead and continue writing further. Price regulation could be the next way. Now what will be the role of price regulation? Let us observe. Price regulation in the form of setting maximum prices that firms can charge. Price regulation is most often used for natural monopolies that can produce the entire output of the market at a cost that is lower than what it would be if there were several firms. In some cases, the government's regulatory agency determines an acceptable price so as to ensure a competitive or fair rate of return. This practice is called rate of return regulation. Now friends, basically government will have its own role to play when it comes to price regulation. So you could see supply of gas, supply of petroleum products, supply of coal, supply of food grains under ration system. All these are having regulation of prices, the maximum price that can be charged. Now for example, if you want to purchase petrol, the price of petrol, which is a maximum price that will be fixed and regulated by government, the petroleum supplying companies or the petrol retailers cannot decide this price on their own. So here we can clearly observe that through this price regulation, government is having a direct intervention in the economy for the purpose of removing the market monopoly. So please write up this whole thing and then I take you ahead. Alright friends, I am sure you have finished writing this whole thing. So after understanding how would government regulate monopoly through price regulation and rules and regulations, we look into the other aspect, that is how would government control the externalities. So government intervention to correct externalities, rules and regulation, that is the direct control, ban on production or consumption of some goods, establish environmental standards, limiting emissions, fix emission standards or limits, install pollution abatement mechanism, charge emission fee, establish special bodies or boards to regulate this entire arrangement. Now we are going to discuss this whole thing in details, but first write up these points quickly. Alright friends, after writing this much, let us move ahead and now deal with one very important aspect, that is about environmental taxes or pollution taxes. This is again a market based approach by the government. So we can say that one method of ensuring internalization of negative externalities is imposing pollution taxes. Now what will happen when government imposes pollution taxes? Industries which are creating more and more pollution will be taxed accordingly. So there will be a measure of emission released by each and every factory, and based on the emission that they release, they will be charged taxes accordingly. So how this will work, we are going to discuss that as well. But this pollution tax, when it is imposed at a higher rate, what will be the impact? The factories will attempt to either control the pollution or have more and more taxes and penalties because of creating pollution. Anyway, let us move ahead and write further. The size of tax depends on the amount of pollution a firm produces. The polluter must choose either to pay tax or to reduce pollution through any means. Tax increases the private cost of production or consumption, as the case may be, and would decrease the quantity demanded and therefore the output of good, which creates negative externality. The proceeds from tax can be specifically earmarked for projects that protect or enhance environment. So basically, from those entities who are creating pollution, you are collecting tax and you are using that money to promote entities which are trying to reduce the degree of pollution, maybe by creating projects of plantation, etc. So before we move further, please write up this whole thing and then only we shall go ahead. Alright friends, I'm sure you have finished writing this whole thing. Now it is not going to be so simple as it appears because there may be certain challenges also. So let us look into what challenges we can face. We will say, however, there are problems in administering an efficient pollution tax. The points could be difficult to determine and administer, complex and costly administrative procedure. So even though you may collect good revenue out of pollution tax, but to manage this whole system of pollution tax, there will be lots of administrative cost, and whatever amount of tax you collect, the major amount of tax will be utilized in administering this taxation procedure. It only establishes an incentive system for use of methods which are less polluting. In case of goods having inelastic demand, this will have an inflationary effect and may reduce consumer welfare. Pollution taxes also have potential negative consequences on employment and investments. So please write up this whole thing and then I take you ahead. Alright friends, let us move ahead and continue writing further. Cap and trade, that is again a market based approach. The second approach to establishing prices is tradable emission permits known as cap and trade. So now over here under this policy, government is not imposing pollution tax on the pollution remitting or pollution emitting entities. What it is instead doing, it is issuing some kind of permission that okay, certain level or certain limit of emission an entity is allowed to produce, but this will not come free of cost. It will be a tradable instrument. That means the factories will have to buy out this kind of license or permission or limits. These are marketable license to emit limited quantities of pollutants and can be bought and sold by polluters. Each firm has permits specifying the number of units of emissions that the firm is allowed to generate. A firm that generates emission above what is allowed is penalized with substantial monetary sanctions. these permits are transferable and are allocated among firms with the total number of permits so chosen as to achieve the desired maximum level of emissions. So please write up this whole thing and then we shall move ahead. Alright friends, I am sure you have finished writing this whole thing. So in this category, in this approach, government can play smart and start creating a kind of scarcity of these kind of permissions. By creating such scarcity, the prices of this permit will increase. That means only and only needy industries will be purchasing these permits, and because these permits have become little more expensive, people will try to just emit less and less pollution, and because of this the pollution will automatically come under control, and therefore the price of the goods will also increase because of its cost increasing, and this will indirectly put a reduction in the demand because of high prices. So let us write even those additional points over here. So continue writing further. By allocating fewer permits than the free pollution level, the regulatory agency creates a shortage of permits, which then leads to a positive price for permits. Guys, I have one point over here. I'm sure you would understand this, what I'm trying to say. One side, government itself is trying to reduce monopoly, correct? But on the other side, if you look into this particular point, they are creating a shortage of these kind of permits, because only government can give you this kind of permit. That means government in its own hand is definitely having that monopoly, and because of that it is able to indirectly regulate the prices. Anyway, we cannot argue against what government has to do. We can just understand what this concept is all about. This establishes a price for pollution. Means if you are causing pollution, you have to pay price for it, not by way of fines or taxes, but you have to seek permission that government please allow us to create pollution or cause pollution, and we are ready to pay price for that. Now the high polluters have to buy more permits, which increases their costs and makes them less competitive and less profitable. The low polluters receive extra revenue from selling their surplus permits, which makes them more competitive and more profitable. Therefore, firms will have an incentive not to pollute. Now that's why I told you this is a very, very important point. So carefully note down all these points and then we shall move ahead. Alright friends, let us now move ahead and look into the advantages and disadvantage of this kind of approach. So first let us talk about the advantages. This system allows flexibility and reward efficiency. It is administratively cheap and simple to implement and ensures that pollution is minimized. It also provides strong incentives for innovation, because all the companies will be trying to make devices which can control pollution or which can emit lesser and lesser volumes or degrees of pollution. Consumers may benefit if extra profits made by low pollution firms are passed on to them in the form of lower prices. Now these are the advantages, but this is not free from disadvantages. So let us look into what are the disadvantages. They do not in reality stop firms from polluting the environment. They only provide an incentive to them to do so. Price level increase of inelastic goods is yet another drawback of this kind of approach. So please write up these points of advantages and disadvantages, and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and now talk about positive externality. In case of goods, production of which have positive externality, government provides subsidy. Subsidies involve government paying part of the cost to the firms in order to promote the production of goods having positive externalities. This is in fact a market-based policy, as subsidies to producers would lower their cost of production. A subsidy on goods which has a substantial positive externalities would reduce its cost and consequently price, shift the supply curve to the right and increase its output. A higher output that would equate marginal social benefit and marginal social cost is socially optimal. So please write up these points and then I take you ahead. Alright friends, so once you have finished writing this much, let us move ahead and continue writing further. Government intervention in the case of merit goods. Merit goods are goods which are deemed to be socially desirable. Substantial positive externalities are involved in consumption of merit goods, and therefore the government deems that its consumption should be encouraged. Examples of merit goods include education, healthcare, welfare services, housing, fire protection, waste management, public libraries, museums, and public parks. Merit goods are rival, excludable, limited in supply, rejectable by those unwilling to pay, and involve positive marginal cost for supplying to extra users. Merit goods can be provided through the market but are likely to be underproduced and underconsumed through the market mechanism, so that social welfare will not be maximized. So please write up these points and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. The reasons for government provision of merit goods are: information failure is widely prevalent with merit goods, equity considerations deemed that merit goods such as health and education should be provided free on the basis of need rather than on the basis of individuals' ability to pay. There is a lot of uncertainty as to the need for merit goods, so consumer is not able to plan their expenditure for merit goods and save for it. So please write up these points and then I take you ahead. Alright friends, let us move ahead and continue writing further. Government can intervene in the following ways. Number 1, by subsidies. Second, direct government provision. Then regulations. Combination of government provision and market provision. Prohibition on some types of goods and activities. Set standards and issue mandates making others oblige. Government could also use legislation to enforce the consumption of a good which generates positive externalities. Simplest and best example for this sixth point could be a compulsion to take COVID-19 vaccines. Now this is definitely one of the merit goods, right? And it is a compulsion worldwide that public in general will have to compulsorily use this particular vaccine. And as a result there could be implementation of legislation. So you can see, person who is not vaccinated is not allowed to travel, will not be allowed to enter certain kind of shopping centers, will not be allowed to work under certain working conditions, and these restrictions will indirectly or directly insist a person to have consumption of such merit goods. So let us write further. A variety of regulatory mechanisms may also be set up by government to enhance consumption of merit goods and to ensure their quality. So please write up this entire thing and then I take you ahead. Alright friends, once you have finished writing these points, let us move ahead and continue writing further. Now we talk about demerit goods. Demerit goods are goods which are believed to be socially undesirable. Examples of demerit goods are cigarettes, alcohol, intoxicating drugs, etc. The consumption of demerit goods imposes significant negative externalities on the society as a whole, and therefore the private costs incurred by individual consumers are less than the social cost experienced by the society. The production and consumption of demerit goods are likely to be more than optimal under free markets. So please write up all these points and then I take you ahead. Alright friends, let us move ahead and continue writing further about demerit goods. We would say the government should intervene in the marketplace to discourage their production and consumption in the following ways. Number one, government may enforce complete ban on a demerit good. Negative advertising campaigns which emphasize the dangers associated with consumption of demerit goods. Now, have you noticed one thing? On a packet of cigarette, very clearly with pictorial presentation, it is given that smoking can cause cancer, it can bring death, it is extremely harmful, it is injurious to health. Now, why this kind of publicity or advertisement campaign? If you look into lots of government promoted advertisement campaigns that completely make public aware of the hazards of smoking and consumption of alcohol, and that is what we mean by negative advertising campaigns. Next thing, through legislations that prohibit the advertising or promotion of demerit goods in whatsoever manner. Notice one thing, in television or in any kind of media channels, you will never find an advertisement for a cigarette or advertisement for any kind of alcoholic drink. That means there are legislations that are prohibiting such kind of advertisements. Strict regulations of the market for the good may be put in place so as to limit access to the good. Regulatory controls in the form of spatial restrictions and imposing unusually high taxes. Now, this could be a very strategic point by the government, that putting high taxes, first of all, it will generate good level of revenue for the government itself, and on the other side, because of high taxes, the cost of these demerit goods will increase in the hands of general public, and public will tend to have less and less consumption of such demerit goods. So please write up all these points and then I take you ahead. Alright friends, I am sure you have finished writing all these points. Now no system or approach can be free from limitations or demerits or shortcomings. So here we talk about the limitations. Determination of tax is difficult. Secondly, the demand for demerit goods such as cigarettes and alcohol is often highly inelastic, so that any increase in price resulting from additional taxation causes a less than proportionate decrease in demand. The effect of stringent regulations such as total ban is seldom realized in the form of complete elimination of demerit good. Conversely, such goods are secretly driven underground and traded in a hidden market. Here I give you the best example of the state of Gujarat, where alcohol is banned. Now because of that ban, whatever is written in this third point is actually observed in that state. So this is the problem. When you try to overstop something, people or public in general will try to just shoot out and consume more and more of such goods. So these are the limitations. Please write it up and then I take you ahead. Alright friends, once you have finished writing this whole thing, let us move ahead and continue writing further under the next heading, government intervention in the case of public goods. Now what can government do with respect to public goods? Direct provision of a public good by government can help overcome free rider problem, which leads to market failure. Direct provision by governments through use of general government tax revenues is a good option. Charge entry fee for use of public goods. Excludable public goods can be provided by government and the same can be financed through entry fee. So please write these points and then I take you ahead. Alright friends, let us move ahead and continue writing further. Fifth point, grant license to private firms to build a public good facility and maintain strict control on the price charged by private firms. Certain goods are produced and consumed as public goods and services despite the fact that they can be produced or consumed as private goods. This is because left to the markets and profit motives, these may prove dangerous to the society. Examples are scientific approval of drugs, production of strategic products such as atomic energy, provision of security at airports, etc. So please write up all these points and then I take you ahead. Alright friends, after discussion of these points and once you have finished writing this, let us now talk about the price intervention. So please write the heading as price intervention, that is non-market pricing. Now over here we first talk about the minimum support price or the price floor. Government usually intervenes in many primary markets which are subject to extreme as well as unpredictable fluctuations in price. For example, in India, in the case of many crops, government has initiated the minimum support price, that is MSP program, as well as procurement by government agencies at the set support prices. Now what happens, basically to keep the interest of farmers and the agricultural segment, whatever production is achieved by these farmers, these are directly bought by the government itself at the MSP level. And once these people are having awareness about MSP, even if they are selling to agencies other than government, they will not sell at a price lower than MSP. This is basically to fix a minimum price, and that is why it is called price floor. Understand one thing, floor indicates the lower limit, cap indicates the upper limit. So we will be frequently using the words floor and cap, floor for the lower limit and cap for the upper limit. The objective is to guarantee fixed and assured incomes to farmers. In case the market price falls below the MSP, then the guaranteed MSP will prevail. So please write up these points and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and now talk about the maximum price that could be either a capping or a price ceiling. So you may use the word cap or ceiling both ways to indicate a maximum price. When prices of certain essential commodities rise excessively, government may resort to controls in the form of price ceilings, also called maximum prices or cap prices, for making a resource or commodity available to all at reasonable prices. For example, maximum prices of food grains and essential items are set by government during times of scarcity. A price ceiling which is set below the prevailing market clearing price will generate excess demand over supply. So please write up this and then I take you ahead. Alright friends, let us move ahead and now write under the heading Government Intervention for Correcting Information Failure makes it mandatory to have accurate labeling and content disclosures by producers. Public dissemination of information. Now I will give you best example of edible items. If you purchase any kind of edible product, it is first of all having a compulsion or a mandate to have FSSAI license. Secondly, under the food permission license, it has also a mandate where they have to mention all the kinds of ingredients used to manufacture such edible item or to produce such edible item. They have to mention the manufacturing date compulsorily and not the expiry date, but what could be the best before date, that is it could be best before within 3 months from the date of production. So this kind of intervention of government is required so that the producers will have to pass on the necessary information to the public. And the best example, as I told you, could be edible items or food products. Regulation of advertising and setting of advertising standards could yet be another point. So please write up these points and then I take you ahead. Alright friends, let us move to the last segment of this unit. Here we talk about government intervention for equitable distribution. Equity can be brought about by redistribution of endowments with which economic agents enter the market. Some common policy interventions include progressive income tax, targeted budgetary allocations, unemployment compensation, transfer payments, subsidies, social security schemes, job reservations, land reforms, gender sensitive budgeting, etc. Government also intervenes to combat black economy and market distortions associated with a parallel black economy. So please write up these important paragraphs and that will be end of the session.